Hello, everyone. Good day. I hope you and your family are safe amid the pandemic. Thank you for attending our webinar on stock market investing strategies and must-haves. I'm John Philip Billones, a business development officer for the Mindanao desk of First Metro Securities, the stock brokerage house of the Metro Bank Group. Our company has been through the years and many corporate milestones. First Metrosec was awarded by Finance Asia to be Philippines' best broker for 2017, 2018, and 2020. International Finance also awarded First Metrosec as Philippines' best online broker and best online trading platform for the fourth time. We do our best to empower individuals and institutions to attain their financial goals. As a supplement to our market education efforts, I'd like to welcome you all to this webinar. In this webinar, we're going to talk about, first, what strategies are commonly used to earn money from stocks. Second, what resources and tools are available to us. And third, how to open your first Metrosec account. Before we go any further, we should know by now that we can earn money from investing in stocks in two ways. First is through price appreciation. Investors buy stocks of companies because of its growth potential. Thus, the famous adage, buy low and sell high. Second is through dividends. This is the stockholders' shares of the company's profits. If paid out regularly by stable companies, dividends can be a good source of income. There's no one-size-fits-all strategy when it comes to investing in the stock market. To make this point, I'm going to introduce you to three people: Jose, Romeo, and Maria. First, let me introduce to you Jose and his lifestyle. He is in his mid-20s and has been investing in mutual funds and stocks for a couple of years already. He loves researching on companies by looking at their financial statements and balance sheets. However, he only has time to do this over the weekend. He can accept moderate risk and short-term losses for potentially higher returns over time. Jose is a long-term investor and prefers to pick stocks individually. He uses the top-down approach when choosing which stocks to buy. First, he studies the economic condition of the country. Second, he selects industries that could grow in such an environment. Lastly, he analyzes companies under that industry that has best potential to appreciate in price with a good margin of safety. Investors look at the country's overall economic outlook first to gauge the viability of investment growth. Here are some economic indicators that are closely followed. The sovereign investment grade determines the creditworthiness of a country. The higher the rating, the more attractive it will be for foreign entities to lend money and invest. The GDP broadly measures the overall production of the country, and investors are most concerned in its growth over a period of time. A robust economy needs a strong labor force to keep it running, so investors are also looking at employment and unemployment levels. In order to maintain the healthy inflation levels, central banks manage their country's interest rates to help sustain economic growth. But life sometimes takes us by surprise and throws curveballs in the form of black swan events. We must be nimble enough to swerve them and avoid big losses. However, should it present an opportunity, we must also be confident enough to hit them for a home run. For example, is the recent COVID-19 pandemic. First, our view is that the nature of this crisis is transitory. This is evidenced by the many high-frequency economic data surprising overly pessimistic market forecasts in the past few months. For the large part, the speed and size of monetary and fiscal rescue packages have cushioned the economic fallout and provided a boost to the recovery trend in second half of 2020. Second, the country's key economic drivers are in good position coming out of the crisis and should be able to re-accelerate growth toward pre-pandemic trends. In particular, purchasing power capacities are largely intact and allows for faster snapback in demand. We highlight that during the pandemic, households were able to deleverage and at the same time grow their savings. There's also better consumer and business confidence ahead. As of the latest BSP surveys, households and corporates' outlook for the next 12 months is positive. We view the Philippines to benefit the most from vaccine availability. The successful rollout of COVID-19 vaccines will speed up easing of restrictions and allow the economy to function at full capacity, faster than so far assumed, reinforcing our view of a V-shaped recovery. We highlight the following as key areas with large headroom to accommodate flow-through from pent-up demand: mobility, tourism, events and social gatherings, mall foot traffic, food services, nightlife activities. We remain positive on Philippine equities market over the next 12 to 24 months, with an end 2021 index target of 8,400 to 8,600 for the PSEI. We would like to remind that we are probably in the early stages of a bull market. Typically, bull markets coming from a recession last for years, not just months nor quarters. We are one of the more bullish firms for this year, but these are the risks to our outlook: inflation to surprise in the upside, slower than expected rollout of activities and vaccines, outbreak returns in waves with new variants, slower than expected easing of business restrictions, emerging markets and Philippine economic recovery does not materialize. After looking at the overall economic condition, investors dig deeper by looking into industries or sectors that can potentially grow faster. Investors would want to position themselves in those who will benefit the most and lighten their position in those who will not. Investors classify industries or sectors according to their sensitivity to the different stages of business and economic cycles. Cyclical industries are naturally dependent on them and tends to perform better during cycle upturns. For example, real estate, financials, and consumer discretionary. Defensive industries have relatively stable demand for its products and services and is largely unaffected by different stages of the business and economic cycles. For example, utilities, healthcare, and consumer staples. This year, we prefer cyclical sectors that can leverage on the economic recovery. First is the property sector. Key drivers for residential demand are positive. Meanwhile, the scope for easing restrictions should allow mall foot traffic and tenant sales to recover to pre-pandemic levels, faster than consensus assumes. Income contribution from offices should remain stable, while hotels will provide back-ended boost to the recovery. Second is the discretionary consumers. In the last few months of 2020, we saw faster than expected normalization of essential purchases and a strong pickup in discretionary spending. We see this momentum continuing on the back of healthy household balance sheets and improving consumer confidence. Third are the banks. The vaccine is a panacea for the Philippine banks. This should boost bank lending appetite and encourage demand for credit. At the same time, sustained momentum in improving economic data will allow for long-term interest rates to rise, providing support to NIMs. Finally, investors analyze the companies under those industries with growth potential. Here are the essential factors to look into. First, how the company's business model. Understand how it generates revenue, costs, pricing, etc. As most professionals would say, never invest in something that you do not understand. Next, get to know the management. It is good to know their background and reputation as they will be running and directing the business. Then it pays to look at the company valuation. This will help you determine what are the good and bad stocks among peers. Using some valuation metrics such as price to earnings, price to book, dividend yield, etc. It's also good to know how the company performed in recent years. Trend of the company's revenues, production costs, and net income. Lastly, we should know the company's growth prospects, key strategies, and how the company will benefit from economic and industry events. In our quest to find opportunities to earn in stocks while handling our responsibilities in life, how can First Metrosec help? Our research team regularly publishes reports in our platform that caters to different kinds of investors. All are available 24/7 and for free to all First Metrosec clients. If you're like Jose, who is a long-term investor and individually picks stocks using the top-down approach, you will love our company research report. The report tells you what's new, the outlook, recommendation, and fundamental target price in the next 12 months for that stock. These are the reports published for stocks within the coverage of First Metrosec Research. We currently have 8 top picks for 2021, and each has an accompanying report accessible via our platform. Other firms might also have a different view, calls, and estimates for similar stocks. If they are optimistic with their assumptions, their target price will be higher. If they are conservative, their target price will consequently be lower. Thus, our best estimate will be the average or consensus view. This is the strength of our Consensus Corner research report. You can check the dividend yield, consensus target price, and rating for PSEI and select non-index stocks. If you like to filter stocks based on company valuation metrics, our stock screen research report can help you. It has 4 model portfolios designed to meet different investment styles. Riding the momentum for expensive but growing stocks, value play for undervalued stocks that have high returns, yield seeker for dividend play for income investors, and love for undervalued stocks but growing. Again, there's no one-size-fits-all strategy when investing in the stock market. Next, let me introduce you to Romeo and his lifestyle. He is a career man and has been investing in the market for a few years already. After work hours, he enjoys looking for opportunities in the price charts of stocks. He also wants to be efficient in his investments, so he is sensitive when stocks go down by a certain degree. Romeo is a short-term trader and wants to be opportunistic by timing the market. Like Robbie and Jose, he buys stocks but only at the right time. He understands that stock prices move in cycles, so he respects the market trend. Stocks go through periods of sideways indecision, upward momentum, and decline during sell-off. This happens as investors go through emotions of optimism, excitement, thrill, euphoria, fear, panic, depression, and hope. In this regard, he only rides bullish stocks that are trending upward and avoid bearish stocks that are trending downward. To monitor for opportunities, Romeo uses the charting tool in the First Metrosec platform that is powered by TradingView. It is easily customizable, has a wide array of technical indicators, and drawing tools that can cater to your needs when trying to time the market. We also provide our clients with powerful Trading Central. This will be your edge against other traders as it automatically detects bullish and bearish events, from candlestick formations, chart patterns, to technical indicators over various time horizons. It will even help you identify the support, resistance, and stop price levels for the stock of your choice. If you'd like to learn from the best on how to time the market for free, First Metrosec clients can access the educational materials on demand in the platform. With internationally renowned guru Martin Pring as your guide, gain valuable insight into the benefits of trading with technical analysis, and take your skill set to the next level. Start anywhere and learn at your own pace with our modular video tutorials and test yourself with online quizzes. If you're a short-term trader like Romeo, you will find our Trader's Playbook research report valuable. First, the report shares what recently happened to the stock, either in the fundamental or technical perspective. Next, the analyst will explain the news or event and how it will potentially affect the stock. Lastly, you will find the recommendation with specific entry conditions, take profit levels, and cut loss points. As a short-term trader, don't get married to your stocks. If it has fallen by more than what you can tolerate, Sell and take the loss. In order to have a net profit with your trades, you must be able to maximize the profits you make and minimize losses you incur. In order to protect your capital, cutting your losses is essential. And here's why. If you cut your losses at negative 5% in a trade, you'll only need 5.3% profit on your next trade to break even. If you cut your losses lower at negative 10% in a trade, you'll now need an 11.1% profit on your next trade to break even. However, if you cut your losses when it has already dipped by negative 50%, you'll need 100% profit on your next trade just to break even. In essence, the greater the percentage loss you incurred, the greater the percentage profit is needed to break even. With our fast-paced and busy lifestyles, what if we do not have the time to monitor the market and cut our losses early? Conditional orders will be very valuable in protecting yourself from losses. Are you wondering what a conditional order is? It is essentially an advanced level of placing an order designed to give traders more flexibility and power. It allows you to set conditions that must be satisfied before a buy or sell order is activated for execution. How does it work? Simple. It is triggered when a stock moves to a certain price level, which we refer to as the trigger price. This type of order is often used as a way to take advantage of bullish momentum, limit losses, and even preserve gains. If you have spent enough time trading in the market, you'll surely appreciate the value of being afforded this ability. With First Metrosec New, Pro, and Go mobile app, you are given the power to protect yourself from losses. The first conditional order type is the sell on breakdown, a feature that gives our platform the order to sell your holdings should it reach your indicated trigger price. Let's say you just bought ABC stock at 100 pesos because you believe the price is close to a major support level and will likely go up from here. You want to mitigate your losses just in case you are wrong by selling the stock when it hits 90 pesos within 1 month. You want to receive no less than 80 pesos for the sale. Next, you can also take advantage of change in sentiment and ride upward momentum. The second conditional order type is the buy on breakout, a feature that gives our platform the order to buy stocks should it reach your indicated trigger price. Say you wanted to buy XYZ stock currently trading at 100 pesos. If it rises to 130 pesos within 1 month, you're willing to buy the stock up to a maximum of 148 pesos. But not all of us are like Jose or Romeo. There are people whose lifestyle are like Maria's. She is a fresh graduate and just started her first job. She appreciated the value of investing early, but not yet confident in picking stocks. After work hours, she is also an online entrepreneur, so she's busy and don't have much time to monitor her stocks. Unlike Romeo, she can tolerate short-term fluctuations because she's confident that the Philippine stock market will continue to grow over the long term. She is a casual investor who prefers to track the performance of the PSEI by just investing regularly. Instead of buying each of the 30 PSEI stocks and monitoring them individually, Maria simply buys the Philippine Equity Exchange Traded Fund, or FMETF. FMETF is a mutual fund that tracks the performance of the PSEI but is traded as a stock in the exchange. In order to see FMETF in action, I prepared here the line chart comparison with the PSEI. The blue line is the performance of the index, while the violet line is for FMETF. As you can observe, it has closely mirrored the price action of the benchmark. As of May 20, it is trading at 94.10 pesos per share, so you will only need 10 shares minimum to buy it. You can start investing in FMETF for around 1,000 pesos only. If you're inclined to invest in stocks for the long term, is there a simple strategy that is easy to implement? Yes, we call this peso cost averaging. All you need to do is invest a fixed amount at regular intervals, regardless of the market trend. You can do this either twice or once a month on a consistent basis. Let's try to put that into action. These young professionals, Paul and Mark, want to prepare for their retirement 30 years from now. Paul decided to start investing today, while Mark decided to do it 10 years later. Since Paul was still new to his job, he can only afford to invest 1,500 pesos per month. After 10 years, Mark was already promoted and received salary increases. So he decided to invest 3,000 pesos per month. They both decided to invest through FM ETF. Since Mark invested more per month, he was able to accumulate 720,000 pesos. Paul was only able to contribute a total of 540,000 pesos. Upon reaching retirement, Mark was able to grow his money to 1.7 million pesos. Not bad, right? On the other hand, Paul was able to grow his money to 2.2 million pesos. Better, right? When you think about it, this seems counterintuitive since Mark invested more money than Paul. However, Paul started investing earlier than Mark. When it comes to investing, time is gold. It's okay to start small as long as you start as early as possible. Peso cost averaging might sound easy to execute at first, but it's challenging to maintain the discipline consistently. Save yourself time and effort in growing your portfolio by automatically investing in mutual funds or FMETF through our voluntary investment program. I personally subscribe to this, and it feels empowering to know that I was able to save and invest already before receiving my salary. As we emphasize throughout this webinar, there is no one-size-fits-all strategy when it comes to investing in the stock market. Some of you might be like Jose, who is a long-term investor and prefers to individually pick stocks. Some of you might be like Romeo, who is a short-term trader and times his entries and exits. Some of you might be like Maria, who is a casual investor and just invest regularly in the PSEI. As a general disclaimer, there is no guarantee in investing. But if you don't invest, nothing will happen. That's a guarantee. Whatever type of an investor you are, we have shown you the First Metrosec resources and tools that can help you trade with confidence when investing or trading stocks. First Metrosec clients have access to our award-winning research reports, charting tools, conditional orders, and voluntary investment program. You only need one account for all your investment needs. You can gain access to your portfolio using your desktop, laptop, tablets, and even your mobile phones. With your First Metrosec account, you can trade PSE stocks, real estate investment trust, exchange-traded funds, invest in mutual funds, and retail treasury bonds. Now you can get the stock market in your pocket, easily trade online, anywhere, anytime, using First Metrosec Go, the most advanced mobile trading app in the country. Do you want to have these features at your fingertips? Open your First Metrosec stock trading account in 3 easy steps, all online. First, visit our website, www.firstmetrosec.com.ph, and click on Open an Account. Second, complete the online form with your username, password, and basic account information. Third, upload your required documents online. When asked on how you learned about us, please use the webinar code ICON2021. And you're done. No need for personal appearance and printed documents. Easy, right? For inquiries, please feel free to email accountopening@firstmetrosec.com.ph. I also encourage you to follow us in our social media platforms such as Facebook, Twitter, Instagram, and YouTube. Search for us using the handle @FirstMetrosec. Despite the lockdown, we have continuously been aggressive in coming up with webinars to reach out to more people. Catch them in our YouTube channel where we upload saving and investing webinars. All these features and convenience within your reach by Philippines' best broker for 2017, 2018, and 2020, and International Finance best online broker and best online trading platform. With First Metrosec, you only need one. #your future first. Thank you and have a happy day ahead.